So, imagine running your payroll, right? You watch the wages seamlessly hit your team's bank accounts, and you just breathe a massive sigh of relief.
Oh, absolutely. It feels like you've completely crossed the finish line for the week.
It really does. You log out, you think you're done. But if you haven't mastered the back-end mechanics of your superannuation, you might actually be walking right into a massive federal compliance trap.
Yeah, paying the actual wages is really just the highly visible half of the job.
Exactly. The real trick, the part that protects your business and actually secures your team's future, is getting those superannuation liabilities securely routed into their individual funds.
Right.
And doing it on time and having it perfectly reconciled on your balance sheet.
Because that invisible second half of payroll, that is where the stakes are the absolute highest, especially right now.
Which brings us to today's deep dive. We're pulling from an incredibly detailed, highly specialized source document.
Yeah, it was prepared by Trinity Accounting Practice, specifically designed for those of you out there managing Xero payroll in Australia.
Right, and our mission today, the whole goal of this deep dive, is to just completely shortcut your learning curve on Xero's Auto Super feature.
And we really need to focus on this right now because of a major legislative shift looming over every business owner.
The July 1st Payday Super deadline.
Exactly. Mastering Xero's Auto Super is no longer just like a neat trick to make your administrative Tuesday slightly easier.
Right. It's not just a nice to have anymore.
No, it's a fundamental requirement for preparing your business for a very strict new compliance reality.
So before we even start clicking buttons in Xero, we really need to understand the structural logic here. Like, why our daily workflow is being forced to change so drastically.
Yeah, because up until now, the standard operating procedure for managing superannuation cash flow has been, frankly, pretty terrifying.
Oh, completely. The historical habit for so many businesses has just been to pay the net wages on payday to keep the staff happy, right?
Yeah.
And then they just hoard the superannuation liabilities for 3 months.
Right, you'd accumulate an entire quarter's worth of retirement debt.
Which is huge. And then deal with this massive, daunting payment batch right before the quarterly ATO deadline.
And the government has finally realized that this system is fundamentally flawed. I mean, too many businesses were just treating employee superannuation as like an interest-free line of credit.
Yes, to smooth out their own cash flow bumps.
Exactly.
And the tragic part is when a business goes under, that entire quarter of hoarded super just vanishes.
Right, leaving the employees with absolutely nothing.
So the new legislation is stepping in to stop that exact scenario. Under the new July 1 rules, super contributions will need to be processed at the exact same time as wages.
Concurrent processing.
Yeah. Okay, let's unpack this with a kitchen analogy. The old quarterly system, it's like cooking a massive 3-course meal every single night for a month, right?
Okay, I see where you're going with this.
But you just throw every greasy, crusty pan into the sink, you never wash them. By the end of the quarter, you have an unmanageable mountain of dread that takes a whole weekend to scrub.
That sounds awful.
It is. Payday Super is simply washing the pan the exact moment you finish cooking with it.
If we connect this to the bigger picture, that completely shifts the burden from a quarterly panic to a manageable ongoing rhythm, weekly or fortnightly.
Exactly.
And Xero's Auto Super, it functions as the training equipment to build that new immediate payment muscle.
Right, you want to build it before the July 1 legislation completely forces your hand.
Because by adopting this concurrent workflow right now, you are effectively ring-fencing your cash flow.
Ring-fencing, yeah.
You stop viewing super as future debt. You start treating it as an immediate, non-negotiable expense tied directly to today's labor.
I love looking at the software as a cash flow ring-fencing tool.
Huh.
But to keep running with my kitchen metaphor,
Let's hear it.
if you want to wash your dishes immediately, you have to make sure your plumbing is actually hooked up to the main water line.
Right.
The technology only works smoothly if your foundational data is flawless. And our sources from Trinity Accounting Practice, they make it incredibly clear. There is a mandatory, highly specific setup checklist that you have to complete before you even attempt a batch.
The journey of a superannuation dollar absolutely depends on that groundwork.
Yeah.
It begins with a one-off connection, officially registering the organization for automatic super within Xero.
And once that primary connection is established,
Then the focus shifts to the individual employee records. And this is crucial. Every single profile must contain a verified tax file number or an official exemption code.
okay, that makes sense.
It also requires a valid mobile number, an email address, and the employee's gender.
Wait, hold on. This honestly made me pause when I was reading through the source guide.
Yeah.
I understand needing a tax file number, but why does a payroll system care about an employee's email address or gender just to route a financial payment?
It does sound weird at first.
Right. Like if I transfer $50 to a friend, my banking app doesn't ask for their gender.
Well, we have to look at the massive scale of the underlying financial architecture here.
Okay.
Xero is not sending this money directly to your employee's retail super fund.
Oh, they aren't.
No, they were sending it to a clearing house. Imagine an employer with 50 staff members.
Right.
Those 50 employees might be spread across 35 different retail and industry super funds.
Wow. Yeah, everybody has their own fund.
Exactly. If the employer had to log into 35 different banking portals, format 35 different spreadsheets, and execute 35 separate transfers.
Payroll would be an impossible full-time job.
Exactly. So the clearinghouse acts as a massive financial sorting office.
Okay, I get it. So it absorbs one single bulk payment and one master data file from Xero,
Yes.
and then translates that bulk data into dozens of micropayments routed to all those distinct destinations.
Precisely. And because that clearinghouse is acting as the central postal service, it relies heavily on deterministic identity matching.
Meaning they really need to know exactly who is getting the money.
Exactly. When that micropayment arrives at the front door of a massive fund, like, say, Australian Super, the fund needs to know beyond a shadow of a doubt that the John Smith receiving these funds is their specific John Smith.
Right, because there are probably thousands of John Smiths.
Exactly. So missing even a single seemingly minor data point, like an email address or gender, is actually the single most common reason a super batch will fail validation and bounce back.
Wow.
The funds require this exact, rigid profile data to verify identity and accept the money securely.
So it's an identity matching protocol operating at just an industrial scale.
Yeah, and the stakes for that matching are incredibly high. Because any ambiguity means an employee's retirement money basically gets lost in the ether.
Which is a disaster for compliance.
A total disaster. Now, Xero does maintain a manual fallback process for payments that fail these automated checks.
But you don't want to rely on that.
No, because manual intervention involves downloading CSV files, manually uploading them to external portals, and just hoping the formatting holds together.
That sounds like a nightmare.
It is. For your everyday operational flow, achieving pristine groundwork in Xero is literally the only way to ensure the auto super engine runs without stalling.
Okay, so let's follow the workflow. Assuming that groundwork is totally pristine.
Okay.
The data is flawless, the employee profiles are verified. When we sit down to execute the pay run, we move into the actual anatomy of a super batch.
Yes, the button-clicking part.
Exactly. And what I found fascinating in the Trinity Guide is how the software enforces a very specific division of power. It uses two distinct user rules.
The preparer and the nominated authorizer.
Right. Break that down for us.
Well, the architecture here is deliberately designed around internal financial controls.
Okay.
The preparer is typically like a bookkeeper, a payroll officer, or an administrative assistant. They are responsible for the calculations and the data entry.
Right.
But the nominated authorizer is usually the business owner, a company director, or the financial controller.
The person who actually maintains the legal authority to move capital out of the business bank account.
Exactly.
So the workflow completely accommodates that necessary segregation of duties. It's like a digital relay race.
That's a great analogy.
The bookkeeper runs the first leg, right? They initiate the process natively from within the pay run. Instead of navigating through a maze of menus, they just finalize the wages, hit make payment, select the superannuation, and submit it for approval.
They do the heavy lifting of tallying the numbers perfectly.
Exactly. And then they have to hand off the baton to the business owner to cross the finish line.
And in Xero's ecosystem, that handoff takes the form of an SMS authorization code, which is combined with an email alert.
Right.
The exact moment the preparer submits the batch, the software generates a secure token and texts it directly to the nominated authorizer's registered phone.
And there's a critical security feature built into this step, right?
Yeah.
The SMS token expires in exactly 24 hours.
Yes, it is a very strict 24-hour window.
Which makes a lot of sense from a cash flow perspective, if you think about it. Business bank balances are highly volatile.
Extremely volatile.
So a batch of superannuation prepared on a Tuesday might bounce if the authorizer waits until, say, Friday to approve it.
Right, because supplier payments might have completely drained the account in the interim.
Exactly. So the strict window forces the authorization to occur while that financial snapshot is still accurate.
It creates a necessary urgency. When the authorizer logs into the platform, they navigate to the superannuation dashboard, and they locate the batch sitting in the pending approval state.
And this is a crucial moment.
It really is. If we connect this to the bigger picture, this represents the ultimate internal sanity check.
Yeah.
It's the final opportunity for the business owner to review the itemized list of payments, verify the total capital required, and just ensure the business has the liquidity to cover the direct debit.
Before the money permanently leaves the building.
Exactly. Once they are satisfied with the figures, they enter that temporary SMS code, click Verify and Pay, and the batch is locked in.
The sequence is secure, it's straightforward, and it keeps that division of power perfectly intact.
It does.
But this is exactly where we hit a massive psychological disconnect for a lot of business owners.
Oh, the processing black hole.
Yes. You enter the code, the money instantly vanishes from your business bank account, but it doesn't immediately appear in your employee's super fund.
Right.
The funds enter what feels like a total processing timeline black hole. Where exactly does that capital go for the next week?
This is honestly the most common point of anxiety for users adapting to the system. To demystify that black box, we have to trace the journey of the capital step by step.
Let's do it.
Starting from the moment of authorization, which we'll call day zero.
Okay, day zero. And the Trinity Guide emphasizes a massive caveat for day zero, right? The 4:00 p.m. Australian Eastern Standard Time cutoff.
Yes. If you authorize the batch at 4:05 p.m., you have completely missed the clearinghouse's daily processing window.
So your day zero officially rolls over to the next business day.
Exactly. But assuming the authorizer beats that 4:00 p.m. clock, the direct debit sequence initiates.
And this introduces a significant quirk that probably generates countless panicked calls to accountants.
Oh, absolutely. When the direct debit appears on the business's bank statement overnight, the line item will absolutely not say zero.
Right. Don't panic when you don't see zero on the statement.
Because the funds are being drawn by the underlying clearinghouse. So the statement will reflect an entity like PayClear Services or Super Choice, depending on the integration.
Which is wild because seeing a withdrawal of like $10,000 to an unknown entity called Super Choice is enough to make any business owner immediately dial their bank's fraud department.
It happens all the time.
But understanding that this is the auto super infrastructure working exactly as intended saves everyone a lot of unnecessary stress.
Yes. So the money leaves the account on day zero.
Right. Now, in an age of instant digital transfers, I'd assume my employee sees the updated balance on their super app the very next morning.
You would think so.
Why does the system force us into a multi-day waiting period?
Well, the delay stems from our reliance on legacy banking infrastructure. Okay.
We are accustomed to consumer-level instant transfers, right? Like sending money to a friend. But institutional bulk clearing still heavily relies on the bulk electronic clearing system. So days 1 through 3 represent the mandatory clearance period. In the software, your batch status will sit at approved pending processing.
Meaning the money is just sitting somewhere.
Yeah, the capital is essentially sitting in a secure trust account managed by the clearinghouse, just waiting for the banking network to fully clear and settle the funds from the employer's bank.
Okay. Then we arrive at day 4, which is a major milestone in the workflow.
Yes. The clearinghouse finally breaks down that bulk sum and dispatches all those individual micropayments out to the various retail and industry super funds.
And at this exact moment, the status on the Xero dashboard updates to a very reassuring paid.
Right. But we need to look very closely at the definition of that word.
Here's where it gets really interesting. I push back on this terminology heavily.
Because, hold on. So Xero says the status is paid on day 4. But if my employee logs into their Host Plus or Australian Super account on day 5, they might see absolutely nothing.
Exactly. What's fascinating here is that the status updates to paid because Xero and the clearinghouse acting on its behalf have entirely fulfilled their legal and technical responsibility.
They did their job.
Right. The money has successfully navigated the banking system and reached the front door of the receiving super funds. From the software's perspective, the transaction is complete.
But from the employee's perspective, the journey is very much still ongoing.
Yes. There is a rigid distinction between the software's legal responsibility ending and the institution's administrative timeline beginning.
Right. The capital has basically been delivered to the institutional mailroom.
That's a perfect way to describe it. It's in the mailroom, but it still needs to be manually sorted and walked to the correct internal department.
And that takes time.
Days of 5 through 7 are entirely dedicated to the receiving super funds, allocating that massive influx of capital into millions of individual member accounts.
Because they're running their own complex reconciliation processes, right?
Right.
Matching the incoming bank feeds against the data files provided.
Exactly. And that final allocation timeline is completely at the fund's discretion. The software status says paid, but the reality is more accurately awaiting institutional allocation.
Which requires a significant amount of patience from both the employer and the employee.
It really does.
We also have to clarify that when the guide outlines a day 5 to 7 window, it is strictly referring to business days.
Oh, yes. Weekends and public holidays stall the timeline entirely.
Right. But the Trinity Accounting Guide does provide a very firm boundary for managing this ambiguity, don't they?
They do. If a batch takes longer than 7 business days from the moment of authorization to fully resolve and appear in the employee accounts, that is the trigger point.
That's when you act.
Exactly. That's when you raise a formal support case with Xero. Anything under 7 days is just standard institutional friction.
Okay, so let's trace the journey to its conclusion. We survive the processing black hole, the funds clear the institutional mailroom, and the money safely reaches the employee's personal retirement account.
Fantastic.
But back at headquarters, if you look at your Xero dashboard, your software still thinks you owe something.
Yes.
The workflow isn't just entering the SMS code and walking away. How do we tie a bow on this and keep the books clean?
This represents the final and, frankly, frequently the most overlooked phase of the entire process, closing the loop through bank reconciliation.
Right.
The operational job is simply not finished until the direct debit withdrawal is specifically reconciled against your liabilities in the bank feed.
And there's a major trap for users here, right?
Mm.
Relying on the simple match or OK function.
Right.
And just coding the withdrawal directly to a general wages or superannuation expense account.
Do not do that. Doing that completely fractures your financial reporting.
Okay, so what's the right way?
You have to allocate that specific bank transaction to your organization's superannuation payable account.
Walk us through that.
Sure. When you are reviewing your bank feed and you identify that super choice or pay clear transaction, you bypass the quick match options entirely.
Just ignore them.
Right. You need to open the detailed create tab next to the transaction line. In the who field, you enter the name of the clearinghouse processor.
Okay.
In the what field, you actively select your organization's designated superannuation payable account.
Got it.
And in the why field, you supply a clear audit trail description, something like fortnightly auto super batch.
You know, I find it really helpful to visualize the superannuation payable account as a digital chalkboard.
I like that.
When you initially finalize the wages back on day 0, the software automatically writes a debt on that chalkboard.
Right.
It formally recognizes that the business owes its employees a specific amount of retirement capital.
Yes.
By taking the bank withdrawal from the clearinghouse
Okay.
and actively reconciling it against that exact same payable account via the Create tab,
Yeah.
you are effectively taking an eraser to the chalkboard.
Exactly.
You are clearing the recognized liability.
Because from a pure accounting perspective, that is the mechanism ensuring your balance sheet remains grounded in reality.
Right, the initial wages expense and the subsequent super liability net off cleanly against each other.
Exactly. If you bypass this step and code the bank withdrawal as a direct expense, your system will think you still owe the original liability.
Which means you might potentially pay the exact same superannuation batch twice.
A terrifying and incredibly expensive mistake to make.
Seriously. Now, there is one final, highly specific landmine the Trinity Guide warns about regarding this reconciliation phase.
Ah, the mark is paid button.
Yes, because occasionally an organization might have historical super accruals sitting in their Xero dashboard that were actually paid completely outside of the software ecosystem.
Right? Yeah, maybe they use the ATO's Small Business Superannuation Clearinghouse directly before migrating their processes to Xero.
Right, so Xero includes a Mark as Paid button designed for this exact administrative cleanup.
But the guide strongly advises treating that button with extreme caution.
Handle with care.
Because if a user is rushing through their dashboard and accidentally marks legitimate, unpaid contemporary contributions as paid, the software does not offer a simple undo function.
Oh, wow. So you can't just click revert.
No. Reversing that error requires actually contacting Xero support, providing the precise granular details of the impacted accruals, and waiting for their back-end engineering team to manually reinstate the liabilities.
Which completely derails the entire automated flow.
Exactly. It's a huge headache.
So handle the manual overrides carefully.
Very carefully. Absolutely.
So what does this all mean? If we step back and view this entire ecosystem, the ultimate rhythm you need to adopt is actually incredibly elegant once that groundwork is laid.
It really is.
You finalize the wages in the pay run. You immediately initiate the super batch from the same screen. You secure the authorization with the time-sensitive SMS code.
Right.
You monitor the batch as it navigates the clearinghouse to a paid status over 4 days. And finally, you erase the liability on your digital chalkboard by reconciling the bank feed against your payable account.
It is a deliberate 5-step operational heartbeat.
A heartbeat. I like that.
And implementing this rhythm into your standard payday routine immediately removes the anxiety of those quarterly deadlines.
Gone.
More importantly, it ensures your business operations will not miss a single beat when the July 1st Payday Super compliance mandates hit the broader market.
You're already ready for it.
Exactly. You guarantee your team's retirement capital compounds exactly on schedule, and your financial reporting remains structurally flawless.
Preparing for compliance by building a better daily habit, it is just a massive upgrade from hoarding debt.
It absolutely is.
And as we wrap up this analysis, looking at the entire journey of that superdollar, it really reveals a fascinating tension in the financial system.
It does.
We have incredible, modern, real-time software executing these immediate complex data transfers. But we still fundamentally rely on a legacy, multi-day clearance and allocation period at the institutional level, that 3-day black box.
Right, and this raises an important question. A really crucial question for the future of our financial infrastructure.
What's that?
Well, as sweeping legislation like Payday Super forces employers to make these contributions immediate and concurrent with wages, the pressure on the receiving end will inevitably build.
Oh, for sure.
So, will the next frontier of federal payroll legislation force the massive retail super funds to radically upgrade their own legacy clearing systems?
Wow, imagine that.
Right. Imagine an ecosystem where employees can see their retirement balances update in true real-time on payday, entirely eliminating that day 5 to 7 guessing game, and finally bridging the gap between modern software and institutional banking.
Now that is a profound thought to chew on. The software has already evolved. The institutions are the ones who have to catch up to the real-time reality.
Exactly.
Well, that brings us to the end of our exploration into the mechanics of Xero Auto Super. Thank you so much for joining us on this deep dive, for getting into the weeds of compliance, clearing houses, and workflows with us. Keep your foundational data clean, adopt that concurrent payment rhythm, and we will catch you on the next deep dive.